So I'll be bringing to you an easy boom and crash strategy that you can easily adopt in trading market, catch good moves with low risks. I'm going to do a little bit of demonstration. Later on, I'm going to show you live examples in charts, right? Okay traders, welcome to my channel. I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out. So like I said, it's based on trending markets. So you see an uptrending market like this, right? You always see impulsive move and pullbacks, impulsive move, pullback, right? Impulsive move, right? For this trend to continue, you also have to, it has to keep creating higher highs. All right, so now in this situation, now instead of taking trades here, remember we wait for price to always pull back to this zone here so that we take our trades, because when price creates this swing, it will always pull back, before going, and when it pulls back, sometimes we are going to miss this entry. So if you miss this entry here, what we are going to do is we will wait for what breakout. Okay, because sometimes now this is the scenario, sometimes you will not always pull back in that smooth manner, right? You will not always pull back in that smooth manner. Sometimes you see a pullback like this when it creates a high, all right, it creates a low. Sometimes it creates a high, the low, maybe it start pulling back like this. Okay, so you see something like this, it might pull back in this manner, right? It can pull back like this, all right, before you see it takes a high. All right, sometimes it pulls back like this, it consolidates, all right, might consolidate like this before it takes a high, right? Okay, now how we are going to be entering this, we are going to be looking at breakouts. Okay, so if you don't catch the impulsive move here, we are going to wait for price to break out from here, right? So we'll connect and then we'll wait for price to break out and then we'll take our trades. Right here, we're going to wait for price to break out. Sometimes when it consolidates and pulls back, we'll wait for this breakout and we'll take our trades here. For the downtrend, for a downtrending market, you can see price sometimes price might pull down and then it pulls back and then cause the impulsive move, and then while it pulls, you see something like this. It could consolidate downwards to create the next impulsive. All right, before price take the next impulse, you might see something like that. All right, it pulls, sometimes it causes the next impulse, maybe it consolidates, sometimes it goes like that before it moves. All right, so if you see this, you have an opportunity. You have two ways of entering at this pullback. You can use your trend line here. Okay, when you use this trend line to wait for price to pull back to here, or you might just want to wait for the breakout. Okay, so you can be looking for this breakout here as well. So if you catch this breakout here, you'll be able to catch this impulsive move. All right, this is from here to here, it's a big move. All right, so you'll be the same here. All right, sometimes you can see catch a move like this. Okay, and then you enter the breakout, or you wait for price to pull back. Okay, because sometimes you might see price comes and then it pulls back and then it moves. All right, so that's just a simple strategy that you find in many trades. Okay, you'll be able to find. So it's not every time that price pulls back directly. Sometimes it might not pull back straight. Okay, so for instance, let's see from our charts now, right? So here we have this as an uptrending market. If you look here very well, you are going to see this. All right, you see our price pulls. It creates an impulsive, creates a pullback, creates an impulsive. Okay, pullback, impulsive. All right, until when you see this lower low broken, and then you see that the trend of the market changes. Right, but from here now, we had many opportunities to take trades if you had understood this before. Right, okay, now if you look at this, let's start from the swing up here. Okay, so sometimes you can drop to smaller time frames, right? You can drop to smaller time frames to catch scalping opportunities like this, because some of the pullbacks like this, they are not very steep. Okay, when they are not very steep, you might not be able to locate or catch very big moves. So sometimes you can drop to smaller time frames like the 30 or the 50 minutes time frame. Okay, let's say this is where the swing, let's say this is where price was currently at, right? So you see these two, impulsive and pullbacks. Look at it here. We have impulsive and pullbacks here. We have impulsive, we have pullbacks, right? We have impulsive here, we have pullback. You can see there, right? So we are considering that we want to be catching those impulsive moves, right? So you can start from here, right? You can see when price move, you might just have to connect like this. Okay, so you connect here and then you wait for this breakout here. wait for price to break out here, maybe you wait for this pullback, you enter your stop loss here, and then you have to target the high. This is the previous high up here. So here what you do, look at this zone here, we have the same thing now. You see that after this pullback, you notice that there was a very strong impulsive move, a very long impulsive move, because the impulsive move is always longer than the pullback. So from here you can now pick a trend line here. Let's consider this where we are price currently at. So if it pulls down here, you just connect. So you are connecting to wait for the breakout. So you place your cursor here and then you wait for it. Alright, so now you wait for price to close out of the zone. So when it close, you see this candlestick as a bullish candle that close above that zone here. So you can go for long position. Alright, you take a long position there. Alright, you can place your stop loss below the candlestick that closed above the zone. Right, so when you do that, this should be your first target. Right, so we have our first target here. We have first target here at this rejection here, and then we have our second target here at this previous high. Right, this is the previous high at the moment. Alright, so you place your TP1 here around this zone, and then your TP2 up there. So you just drag and then you wait for price to see how price is going to move. Okay, so you can see there, right, beautiful win right there, and you can see the risk to reward ratio. Look at the stop loss and the take profit size. Okay, so you see that it's that simple. We have this pullback here, which is not like the normal pullback, the one that we were supposed to trade. Alright, even though if you go to small time frame like 5 minutes, you can see this to be something that you can use a trend line on. But now here you see that this is an impulsive move as well. So this was the impulsive move, it pulled back right here, and you see this another impulsive move, it pulled back a little. We have an impulsive move, and now you can see this pullback. Right, so you can see it it pulls back in the form in which I was explaining. Like you can see here, look at how it pulls back. Alright, you see the pullback there, right? Pulls back such a manner that you can be able to use a trend line. If you go to smaller time frame, you can be able to catch something very big there. Alright, now what you simply do is this: you just connect and then you wait for a breakout. Because if you don't enter at the initial stage here, alright, you can wait for this the breakout of this zone up here. You pull down. Okay, so when you pull down, you wait for price to close below or close above, and then when you enter, remember your stop loss should be below, a little bit below the candlestick that closed above the zone, right? So that in case price pulls back, you're not going to get stopped out. Okay, look at it here. Now what happened? Okay, we have the breakout, a very nice breakout. Look at this strong bearish candle. So remember the cause on the candlesticks. I explained to you guys the significance of this kind of candlesticks. Right, so we just go for our long position there. Right, go for our long position, and then we have our stop loss below the candlestick that closed. Right, so we have our stop loss below the candlestick. We have our targets around this zone here, and then we have our target at the previous high here. Right, so let's see. Okay, we got stopped out. Right, we got stopped out here. Okay, no challenge. Okay, you see now that what happened, it's like the trend of the market currently changes. Okay, so after we see that the trend could be changing, we go back to the bigger time frames, because that's where we can possibly be determining whether the trend has really changed or not. Right, so if you go to a bigger time frame, you can see that. Alright, you can see that from here we had the trend changed. We had the trend changed after when price broke through this low here. Okay, so after when price broke through this previous low here, we will notice now that anything that happened now is a trend. So if it's a change in trend, you can see now price start pulling back and creating impulsive move. So when that happened, what happened? Now here we are now looking to connect these lows here. So we are trying to connect these lows now to wait for price to break out of. So you drag. Right, so you wait for price now to see if we'll get a close candlestick close below. Okay, we had the candlestick close below here. Now you see that the bigger the consolidation, the longer the impulsive move is going to take. That's why you see that when it consolidates just a little, right, it's going to take a shorter while too. So what we do now is we look for our short position. We are looking for short position here. Okay, so we short here, and then our stop loss above that candlestick that close above the zone. Okay, so we have previous, this one now we can target a higher zone. All right, but first of all, let's target the previous low here, which is this one, and see how price is going to move. Okay, all right, okay, target hit. Okay, target hit right there. Price pulled back around the zone and then consolidated again. If you look at it very well, now if you drop to smaller time frames, you can see enter based on this, because if you look at this is a big consolidation in smaller time frame. As price pulled back, remember it has created a new low, because this is a new low that has been created. Now if you look at this here, this is another entry opportunity that you can see in the 30 minutes time frame or the 50 minutes. So if price was currently here and then I was connecting this, I was still going to enter here, as you can see, right? So look at it then, and you can see already, you see how price has already moved. Right, so basically we have been entering, we have been shorting to where we have been shorting here after this candlestick close, and then our stop loss above the candlestick that closed below the zone, and then we drag. We can target right this previous low right down here. Okay, you can target that previous low there, and then we wait for price to move. Okay, you see that this one price actually came back and retested. Price came back and retested the zone before continuing, but all in all it finally went down. So if you extend it, you are going to see this is how it happened. Okay, now look at how price came back and almost hit this zone here. You see that, you see the reason why we place our stop loss above this candlestick, because sometimes price could pull back and it might hit your stop loss prematurely. So you have to wait for price, so you have to make sure that your candlestick is above, or your stop loss is above the zone. Right, remember trading is all about probabilities. Okay, it's probabilities that we are playing. So you have winnings, you have losings, but look at the risk to reward ratios that we are using. With this risk to reward ratio, even if you have just 3 wins or just 3 wins and you have even 5 losses, you still be in profit. Right, you can see, and price kept on doing that, came, and you see, you know, it continue creating these zones, creating lows that you can connect, and then you wait for breakouts, and then you enter, etc. That's how it continues. So you have to identify what the trend is, and that's how it continues. Now if you look at, this is where we are now. Right, this is where we are now. So basically we are on a pullback phase, so we are actually waiting for consolidation and breakout, and we are shorting. So basically that's how simple the strategy is. Simply identify a trend using an uptrend or in a downtrend. You just identify where you are going to be getting your impulsive move, and then your pullbacks. So you get the pullback, you connect, and then you wait for the breakout, you enter. So that's simple as it. You can use it in any market. Thank you for watching. If you are new to the channel, don't forget to subscribe by hitting on the subscribe button and notification bell, so that whenever I post a new video, you are going to get notified. Thank you for watching, and see you in the next video.